Welcome back. Joining me for a closer look at what's playing itself out in the market scene is Imtiaz Suliman from Sentio Capital. Imtiaz, thanks so much for joining us today. So there's a slew of data coming out this week, especially out from the US. The first print out is the producer price report. Prices up 0.1% in July, coming in below expectations. Surely this just beefing up the case for a Fed rate cut come September. I guess the big question here is by how much?
Yeah, thanks, Anati. I think what we're seeing is inflation is certainly coming down, trending in the right direction, and the Fed does have room to cut. It's still very much data dependent. We have the CPI number coming out tomorrow, and that will give us further indication of how much consumer price inflation has declined by. But if you're looking at the past, PPI has led CPI, and the downward trend does bode well for CPI. Just in terms of the rate cut and by how much, there's a bit of a 50-50 chance between a 25 basis point and a 50 basis point cut by the Fed. And again, it will come down to the numbers that we see coming out of the US. The CPI number will give us an indication, and some of the labor numbers will also give us an indication whether the Fed has leeway to cut by a bigger percentage than 0.25%.
Let's stick with data, but on the local front, we had unemployment, the unemployment rate rather ticking up to a near 2-year high, and mining production slipping in June and slipping for the second quarter as a whole, all pointing to downbeat GDP numbers for the second quarter, right?
Yeah, I think, unemployment numbers are usually lagging indicators, but it does not bode well for the second quarter GDP number, again, which would be lagging. What would be positive is that we haven't had load shedding now for over 4 months. And I think you're going to see some stability and some confidence coming back to the South African economy as we've passed the election period. We've settled on the new government of national unity. We haven't had load shedding. And it comes down to fixing up some of the port issues that we've seen. And that again speaks to, lower mining production because a lot of the mines couldn't produce as much as they wanted to, given the lack of capacity to have that railed efficiently and exported because of the rail issues and port issues that we've seen. So they had to curtail some of their production. If those elements start trending in the right direction, that will add positively to mining production and ultimately to GDP growth, which will translate into hopefully better employment numbers going forward.
Imtiaz, it doesn't seem like, we're going to get the best case scenario when it comes to growth if we don't get both Eskom and Transnet up and going. You look at manufacturing, where we also had downbeat numbers there, even though we have less energy issues. And the same thing is kind of playing out in the mining sector, that there is energy, we don't have load shedding anymore, but both these sectors aren't really faring well.
Yeah, I think that is a fair comment. It does take time to get the wheels moving again after a period that we've come through. We've had a number of years of severe load shedding. We've had a number of years of instability and in terms of the political scenario. So I think as confidence comes through back into the market, we would see better numbers going forward, although it's not an overnight fix. Those port issues, those rail issues are going to take some time and are going to take a lot of capital to get them up to where they need to be.
What surprised me today is the Rand's performance. Now, according to an RMB analyst, the Rand was the best performing emerging market currency yesterday, and it seems like it's still just powering through. What is fueling the Rand's performance?
I think a lot of that has to do with the US interest rate outlook.
Okay.
Ultimately, it's a commodity currency. And if the US does cut, and as we've spoken to the US interest rate outlook, it does look like they're going to cut, just by how much. And when that does happen, it's usually positive for emerging markets, and the rand is a high beta currency, which would fare better in a lower interest rate environment out of the US.
Now let's get into some company news. We had Home Choice out with results, delivering a double-digit growth in earnings. Rather, is it that fintech division, just powering through and boosting those numbers?
Yeah, I think ultimately it is the fintech side that has come through for them. They're also a consumer play, which hasn't done too badly in this environment. So they've weathered the consumer inflation problem quite nicely, which bodes well for them. And I think if you look at what they tried to do for the business in terms of enabling fintech, making them more digitally advanced, that's bode well and has come through in this result.
Markets really welcoming that earnings print. The share is up close to 13% today. Now, we also had Santam out with an update forecasting double-digit earnings growth. Did you expect these numbers, considering the amount of claims short-term insurers like Santam have been getting on the back of these harsh weather conditions?
Yeah. Yeah, I think it speaks to some of the company initiatives that they've undertaken in terms of making sure that they're underwriting for the risk that they're taking. And they've had a few initiatives in terms of geolocating, which essentially means looking at the different areas, looking at the risk from a weather perspective, from a crime perspective, and making sure that the pricing is appropriate for the risks that they're taking. So they are guiding for their margins to be between the target range of 5 to 10%, and it looks like it's going to come within that range, which speaks to a good underwriting result, but also consumers prioritizing some of the insurance spend within their portfolios, as well as the big corporates and agricultural sector also coming through with better underwriting results from those segments.
Imtiaz, before I let you go, what is your stock pick for today?
I'm going with process. Ultimately, when we do talk about process, we have to talk about Tencent, because Tencent is the ultimate driver for the value that we see in process. So just looking at Tencent, there's strong drivers there in terms of its gaming revenue, which has come through a period of regulation. We've seen the Chinese government starting to allow new games to be put through to the market. And then secondly, you've got the advertising revenue, which is coming through on Tencent side, which is a higher margin business for the Tencent stable. So they will be able to grow earnings in the double digits. Their return on equity is also close to 20%. And ultimately for process, it makes up 70% of their revenues, but over 100% of their earnings, given some of the other businesses within the process table that are still loss-making. So I think it's all about Tencent, and Tencent is on a good recovery path, which bodes well for process.
So process one to look out for. Imtiaz, thanks so much for joining us and just taking us through the day's markets activity. That was Imtiaz Suliman from Sentio Capital.